In the past, some taxpayers were able to write off tens of thousands of dollars through the state and local tax deduction. While that deduction is much less generous today, it's still a factor to consider when you fill out your tax return. So we spoke with a tax attorney to find out more about that.
The state and local tax deduction, also known as the SALT deduction, is an itemized deduction that you can take on your federal income tax return. There are three types of taxes that could be counted towards the state and local tax deduction. The first is state and local income taxes. The second is state and local personal property and real property taxes. And the third is general sales taxes. Now, an important thing to keep in mind is that you can't claim all three. When the Tax Cuts and Jobs Act was signed into law, there was a number of tax changes. One of these changes was to put a cap on the state and local tax deduction that one can claim. It is capped at $10,000. So if I were trying to decide whether or not to file using a standard deduction or an itemized deduction, the first thing I would look at is what would the benefit of a standard deduction be in my circumstance. For example, if I were a single taxpayer, I would know that for 2019, the standard deduction is $12,200. When viewing the itemized deduction, I would have to ask myself, well, would the itemized deductions, when tallied up, would that meet or exceed that $12,200 number? If it doesn't, it's a lot of unnecessary work. I would probably end up filing using a standard deduction. For this example, if my itemized deduction as a single taxpayer is greater than $12,200, then I'm going to start looking at the state and local tax deduction and what I can claim in that section. The property tax section, it isn't to say it's more important than the other areas, but that is a key driver as to what benefit one can receive from filing an itemized deduction now. And the reason for that is simply because property taxes vary widely from state to state. Some of the key states that have the greatest property tax burdens on average are New York, New Jersey, and California. With a few exceptions to the rule, most people are paying a lot in property taxes if they own a home. That amount could easily exceed the $10,000 mark.